Amazon earnings just coming down right now. Amazon first quarter earnings beating expectations by a wide mile, 98 cents. The market was looking for 83 cents. Sales at Amazon Web Services increasing 17%. The market was looking for 14.5% growth. That's the fastest that AWS has grown in some time. Total sales for North America also higher than expected. So Amazon Web Services net sales higher than expected. We're also getting outlook numbers. Net sales outlook a little bit below expectations. Net sales outlook below expectations. Expecting 144 to 149. The market was looking for 150. So this is key. We will see how the sales growth the sales beat, I should say, in this quarter is reconciled against the weaker forecast for second quarter. So first quarter beat both top and bottom line and Amazon Web Services. On Amazon Web Services, which remember is their cloud computing business, that while it's a small portion of, I shouldn't say small portion, it's a smaller portion of their total sales, it's a bigger portion of profitability. They say, Amazon is saying that Amazon's web services growth rate is now at $100 billion annual revenue run rate. This as AWS revenue came in this quarter at $25 billion. That's higher than the 24 that was expected. It's 17% growth. When you exclude FX effects, that was much higher than expected. We're seeing the stock move up. It's up about 4%. We've got a power panel to go through this and some of the other earnings that are scheduled to come due. Rohit Kulkarni is analyst at MKM Roth Partners. James Demmer, Chief Investment Officer at Main Street, is a shareholder of Amazon and some of the other stocks that we're going to talk about. And Andy Bell is on deck for some of the consumer stocks that we're waiting for. Rohit, I want to start with you, if I can. Just the simple read through of the numbers, the beat this quarter, the strength in Amazon Web Services, the fact that it's at $100 billion annual revenue run rate, contrasted against an outlook for sales for the second quarter that seems to fall short.
Yeah, absolutely. I think you covered all the three key things. Clean beat on revenues, clean beat on margins in 1Q. And the biggest positive, as you just said, Amazon Web Services at close to 17% year-on-year growth, XFX. That's much above expectations. I think Q2 guidance, I would just put it as mildly conservative. At the high end, investors was looking at about 150 billion. They're putting 149 billion at the high end. So I think give or take, there's slight yellow flag, but Q2 operating income guidance also brackets what we were expecting. So I would say 4 out of 5 stars when it comes to what Amazon is reporting. And also bear in mind what Microsoft, Google, Facebook said, told us last week. The expectations for Amazon were very high heading into print, and they did jump over that high bar with that AWS number. I think so. We would be buyers on strength of what we are seeing right now.
Well, that was going to be my next question. Is this a situation, I think the question was, because Microsoft and Google were so strong, well, are they taking market share? Or is this a rising tide lifts all boats? Would you say it's the latter?
I think, again, Amazon Web Services has been the market share leader. During a part of 23, there have been signs of them losing a little bit of market share to Microsoft, given the difference in the growth rate in the cloud. But right now, we are at the early stage of that very large wave. I would just call it a tsunami of what cloud is going to look like with all the AI workloads coming in. And I think Amazon is just proving that they are standing right at the front of that edge of the wave to benefit the most as that AI wave kind of flows through. And rising tide, it's not just a tide, it's a tsunami. I would just tell you that over the next several years to come.
James Demmer, you're a shareholder of Amazon. I imagine you're taking comfort in the results, but by and large, these AI darlings, at least this quarter, really have lived up to, why investors piled into them.
Yeah, they have, and these are huge expectations. And boy, they didn't just meet them; they beat them. And definitely the cloud revenue it was way bigger than anyone expected. Ad sales bigger. I'm really interested to see that the margins were higher than expected, and that's a big part of the Amazon story. Yes, it is an AI arms race, and these companies, they've got to deliver on the expectations of the street. And I think Amazon's a great example here. And part of it is, right, growing that cloud AWS business as aggressive as they have. The ad sales, the Prime membership as well, keeping those margins high. That's all about keeping those costs low. It'll be very interesting to me that on the call, if Jassy talks about spending discipline going forward, are they going to have to go through another investment cycle? That could be a concern as we get into the call. But this is 4.5 stars. I think I'd give it out of 5, and I think they're meeting expectations without question.
Well, Rohit, why don't you pick up on that point around spending? Certainly, Meta flicked at that and saw its stock get taken down afterwards. Do you think that Amazon will say it's going to spend to invest in this, and will investors be tolerant of it?
I think what Amazon has going for them is they have this declining spend of retail. So they are in this multi-year cycle of how retail capex is going to decline year on year. And I think we are in the 3rd year. Probably they have one more year to just reconcile the huge build out they did during kind of the peak COVID year. So it's a multi-year cycle. So they have this benefit of that incremental investment coming down while they accelerate the cloud spend, and hence the overall spend that the company would have to do wouldn't optically look as severe as some of the other cloud players are doing, like what Facebook is doing, what Google is doing, where they do not have that benefit of another chunk of capex coming down, which Amazon has. So I think when it comes to cash flow generation capabilities, I think that's what we like about Amazon, because despite the AI spend that this company is doing, there is another part of the story that is being very, very cost conscious, and we like that, and that's why Amazon is our top idea.